In the wake of Turkey's elections results, Prime Minister Davutoglu has resigned. Now, in data out today showing GDP growing faster than estimated, what's in store for the Turkish nation? I'm joined by Chief Economist with Deniz Invest, Ozlem Derici, to find out. Ozlem, Sunday's election results saw the AK party lose its majority, and now the Prime Minister has resigned in a procedural move. What's next for Turkish politics, and what will it mean for the economy?
The process will continue with the mention of official results first, and then the post-election process or the formation of government will start. We're currently waiting for this. Nationalists are strictly against the peace process with Kurdish minorities, and they want the president to remain in constitutional limits. But AKP, on the other hand, is strictly committed to the peace process, and they want to extend the constitutional limits of the president. They want to shift to executive presidential system in the medium-term period. And the Kurdish party, HDP, which is new in the parliament, stated that they will never make a coalition with the AKP. And the main opposition party, Republicans, are also have some conditions. So it is very, very hard to form a coalition. Of course, they will sit on a table and try to find a common ground. But in the interim period, markets are hurt by, or investor confidence is hurt by the political uncertainty.
Let's look to GDP data out today, growing faster than estimated during the first quarter of the year, caused by a sharp pickup in consumer spending. Is this growth sustainable?
This growth is sustainable because, yes, consumer spending showed a sharp pickup, and foreign demand contribution was negative. This is not a combination that we like. We want the vice versa, lower consumer spending and higher foreign demand contribution. But although it is higher than expected, it is not too high. I mean, in the previous years, when the growth composition was more unbalanced, we saw higher and higher domestic demand contribution. But it is now at moderate levels. But we need a higher foreign demand contribution, and we expect it to come with the European economy's recovery. As the quantitative easing in the Europe continues, GDPs get higher in European countries, the contribution of those countries on Turkey's exports will increase, and foreign demand contribution will turn positive. Our expectation is that. So the composition of growth will improve. So this is not at unmanageable levels right now, and we expect it to improve. But the main risk over growth is the negative impact of higher exchange rates over both real sector and consumer confidence.
And what do you think this result will mean for the lira? The lira strengthened after the data, so is this trend likely to continue?
Yes, it was considered positive. The growth numbers were welcomed by the markets as it was higher than expected. But as the political uncertainty is still in the cards, and we may see further volatility in the period ahead, until the new government is formed, we cannot say that the strengthening of lira will continue. There will always be an upside risk over exchange rates. But as soon as we see the political uncertainty unfolds or disappears, we will probably see some ease in the pressure over exchange rates. I'm not saying that this will be the new trend. I mean, the appreciation will be the new trend because we have Fed tightening on the road. So we may see some relief after the formation of government, but over the medium term, the pressure over exchange rate is likely to continue.
Well, that's all from Ozlem and myself for now. For more exclusive interviews and regular updates, be sure to keep clicking back to Dukascopy TV. Bye for now.